Hello and welcome back to Core Finance. I'm Matt Brown. I'm joined by Mike Ingram, who is a strategist at BGC Partners. Hello, Mike. You well?
Good morning. I'm very well, Matt.
Good. We're going to talk about the UK housing market. Obviously, getting a lot of headlines over recent weeks, months. Are we seeing a slowdown? Are we not? What is going to happen? Is there's been a bubble that's been there for 10 or so years that hasn't burst, and will it finally burst? Who knows? But you've kindly brought along a few slides, really, just to talk us through where we are with the current housing market in the UK.
Okay, so this is data taken from the Royal Institution of Chartered Surveyors, and they do a monthly survey about where prices have been in the previous month and or where they expect prices to go. And on both measures, you can definitely see a decline. It's been on a declining trend now, certainly since the start of the year. And both of these measures, both on spot pricing and, say, forward pricing, are now pretty much at that zero level where they're not seeing any price movement at all. Now, to some extent, this marries up with other data that we've seen recently from other providers such as Nationwide Building Society. And their data for July, for instance, they showed the lowest London house price growth in 5 years. They showed the first outright decline in house prices in the broader southeast since, I think, 2010, so for seven years. And there was also evidence more broadly that the gap between the faster growing areas, and there still are some areas which are showing decent growth, West Midlands, East Midlands, and the slowest growing areas is actually concertinaing, shall we say. I think that was the lowest spread in 7 years. So, slowdown in London, that seems to be rippling out to the rest of the country. Now, we also had some data, perhaps to throw a little bit of a spanner in the works, from the Office of National Statistics, and they take data from the Land Registry. Now, it's generally felt to be a bit more comprehensive because, of course, it also includes cash buyers, although, I'm not sure when I last met a cash buyer, get them to write me a check, perhaps. But the problem with that is that data, it tends to be quite lagged. Yes. It also tends to be somewhat prone to subsequent revisions. Sometimes they're quite substantial. But I say the weighted evidence at the moment is for ongoing slowdown. And if you think about it in terms of just basic affordability, what's happening with wages, yes, the job market in the UK remains very, very buoyant and confounding all expectations of the broad economic community. There are issues with Brexit. I think the last 12 months effectively been a phony war on Brexit. We're starting to see the sort of rancorous arguments coming out. I wouldn't be betting on a significant pickup in terms of pricing. I think the Nationwide are looking at a price increase overall for the year for 2%, and that's down from 4.5% last year. So they're expecting a slowdown. The data tends to be supporting the idea that there's a slowdown. So yeah, that's it. Certainly it seems to be a weakening dynamic.
And then there are other headwinds as well, potential interest rate hikes further down the line maybe. We've also seen stamp duty hikes and obviously the cost of having a second home and linked to that. So and maybe supply coming through.
Yeah, well, I mean, there's a lot of moving parts, isn't there? So I mean, you mentioned stamp duty, quite right. And in fact, the change in stamp duty last year, the first quarter of last year, did cause a pickup in demand because everybody tried to sort of transact ahead of that change. But it did hit the top end, and of course a lot of houses, particularly in London and the South East, were captured by that. And it's one of the reasons why the London property market, initially at the top end, again it's rippled out to even the cheaper boroughs, was initially one of the hardest hit. And as I said, now we're starting to see it elsewhere. Other things, so we've had Help to Buy. I mean, there's rumours that that's going to be scaled back. It's knocked some of the estate agents recently. You've seen some of the share prices take a significant dive. What else have you got? Well, you've got mortgage rates, as you mentioned, interest rates. Well, look, Bank of England talks a good game. Market doesn't believe them. One of the things the Bank of England is actually worried about is slipping underwriting standards in mortgages because the mortgage market remains incredibly competitive. You've seen some players such as RBS, to some extent HSBC, aggressively bid for market share. You've seen some players like Lloyds, through Cheltenham and Gloucester mainly, just saying, we're not going to play this game. That's one of the reasons they've increased, for instance, their exposure to credit cards. But you have started to see maybe a little bit, some tentative signs of banks becoming a little bit more risk adverse for the higher risk loans, so sort of 95% loan to value rate. That the rates being offered there by banks have actually started to edge up a little bit. But yes, of course, if we were to see an interest rate hike from the Bank of England, that would impact them. I don't think that's going to happen probably on a 2-year horizon. What is more likely, I think, from the Bank of England is for them to actually go directly to the banks and again put extra restrictions in terms of loan to value or income to value ratios. They've already done some of that. They could do that further. But the second point I actually wanted to make on my next slide, just to get to it, is that perhaps you also should be increasingly wary about the actual numbers which come out on any of these providers, be it Rightmove, be it Nationwide, Halifax, RICS, because the housing market is in any case drying up. There are fewer and fewer transactions actually taking place. You mentioned supply and demand. Well, obviously, demand is there. We're seeing population growth in the UK. But there is very little supply coming on. There's not new build coming on, but also people are already in houses just basically aren't letting go of them. They're not putting them on the market. And so, as I put slim pickings for estate agents.
Well, that's it. They make money in market movements. If they see flow, it's all about flow, isn't
exactly.
it?
So, for them, to an extent, great. House prices are really high, but nobody's transacting. I'm not making any money. It's tough. And again, on those measures, both in terms of instructions to sell and new inquiries. Again, the Royal Institution of Chartered Surveyors, on that measure, again, we're back into negative territory. We saw that big pickup in the early part of 2016 ahead of that stamp duty move. We saw a big dive, very temporary, ahead of the referendum vote last summer. Seen a bit of a bounce back since then, and now that's fading back in negative territory. So, we will see numbers churning about. I've spent most of this talking about what the numbers actually are, but just bear in mind this market is becoming increasingly thin.
So if I'm sitting in a house that I can't sell, should I be shorting the estate agents just to make a bit of money?
Oh, I'm not sure I should be making recommendations, but I mean, it does seem to me that there are headwinds out there structurally.
Understood. Mike, thank you very much for joining us today.
Pleasure.